Time to see what's on the radar for John Zechner, chairman and founder of Zechner Associates. John, first up, you've been watching the software stocks and Microsoft especially.
Yeah, Roger. I mean, I sort of love sort of picking through things when they start getting beaten up and see, where we can get relative value. We've been out of Microsoft for a little while now. I just had a problem with the valuations. It's a great story, but, trading at 35 to 40 times earnings always sort of just was a little too rich. I found other areas where we potentially had better growth at a lower valuation. But the big pullback in the stock, I think, is an opportunity to get back in it now for the long term because they continue to dominate software. I mean, when you look at the operating system for over 80% of the world's computers, and they continue to migrate people to the cloud. I mean, our company is a good example where, Roger, we're a small outfit, and our backroom servers were coming up for, their useful life. It ended a couple of years ago, and I was looking at, $50,000 plus to replace them, or we could migrate everything onto the Microsoft cloud, which we did seamlessly for cost of, a couple of $1,000s. Suddenly cybersecurity is their issue, data storage is their issue, accessibility is there. They look after everything for us, and it's been fantastic. I think they own that. They own the enterprise. They own the consumer, and they're not going to give that up in the short term. So I think they can migrate slowly onto AI platforms, whether there's Copilot, whatever, and they will be able to continue to grow. I mean, Azure is still growing at around 40% right now. So it continues to be a great story. But suddenly, I can buy it about under 24 times forward earnings. So it's to me that's attractive. So it's we've stepped back into it.
Is being big a good thing with AI right now, or is there no?
Well, some of the biggest disruptors are these small companies. What you've seen, you can go back to DeepSeek last year and, some of these players we've seen in the financials recently. So, small guys can be disruptors to a large degree, but the big players have the platforms, they have the data, they have the bigger moats around what they provide to their customers, their enterprise customers, the consumers and everything else, and where there's data, whether it's application, whatever it is. And I think that protects them better in the long term than, the mid-size and the smaller companies.
All right, and from the cloud, we'll bring you back to earth. Torex Gold.
I like the golds generally, Roger. I think what's going on
even with everything that's
will,
going on, though, you're not too worried.
Even more so now, because I think what's going on in the U.S. will continue to appreciate the dollar. I mean, when Trump talks about growth of 15%, I mean, we start to even go down that road. The only way you're going to do it is you're going to inflate out totally, which means the dollar collapses. So I think this weaker U.S. dollar will continue. Meanwhile, the gold stocks are not reflecting anything close to $5,000 an ounce. I think I look at some of the most recent quarterly numbers are reflecting more $3,000 an ounce. So I think there's upside there. I think you continue to see central bank buying, public buying in general, and the stocks on that value are cheap. Torex sticks to me as a particularly cheaper one, trading at a discount to net asset value, about 4.5 times forward cash. So Morales property in Mexico was coming to the end of its useful life, or the El Limon deposit. They moved seamlessly to the Media Luna property. They'll replace production completely within a year. So it was a seamless transaction. They're back to cash flow positive, and they've also gone underground both at Media Luna and El Limon, and have found extended their deposits there into the mid 2030s with about a 30% copper content as well. So I think that's a great story, cheaper than the rest, but I like the sector in general.
And any concerns about the Mexican mines with what's been unfolding lately there with that?
You know what, Roger, that's a really good point, because, Torex has had a sloppier week, and I was sort of looking at it, and I thought, I guess, with what's going on, I mean, they're not really close to the Sinaloa cartel or anything like that, but it's probably just, and what's going on with El Paso this morning and things like that are making people a little more worried about the border, and whereas Mexico felt like a very safe jurisdiction, maybe people are getting a little more concerned. I still think, Mexico is not like a lot of the jurisdictions in the world where we were about, like West Africa and South America, and some of the regimes there, I think it's much more stable. So, but there obviously are concerns about, the cartels and what happened to, in terms of crime, and obviously the deaths we saw in the, the Vizsla Silver, are tragic, and it does cast a bit of a pall over Mexican production in general.
All right, and let's get in MDA Space before we go. We got about a minute here.
Yeah, it got hit last year on some worries about, say, they lost the EchoStar contract. People worried they're going to lose the Globalstar contract as well, but that won't happen because Globalstar is Apple's entree into the satellite world, and they continue to provide the equipment. They've added a bunch of additional contracts recently in space. You know, they got the LEO, the low Earth orbit satellites, obviously, in the constellations, but they're getting other sort of space contracts as well, including for the Arctic. You know, the Shield, the Dome. That's a huge contract going forward. So these guys are trading at a discount to the group. They had a rougher year last year. I think it's been a great long-term growth story. It's underappreciated. They're the arms dealer of the space race, and I think they continue to be. And it's a great Canadian company with a good backlog and growing.